welcome back to another video. In today's video I'm going to be going over the 1 minute strategy version 2. The reason why I'm doing this is because we've had a lot of changes from the original 1 minute strategy video that I put out a while ago. So this is going to be the updated video for you. If you have any questions, drop them in the comments below and I will get back to you. If you're new here, hit the subscribe button, hit the like button, and hopefully you find value in this. So let's get into it. Indicators. First thing is your indicators. We need to get your chart set up to look similar to mine. Obviously you're going to have little differences, but let's get it similar. So search for EMAs, okay? We use two EMAs. We use a 78 and we use a 390. We use the 390 because if you go onto the 5 minute, the 390 is actually just a 78 on the 5 minute. So all we're doing is using a 1 minute 78 EMA really and a 5 minute 78 EMA. Okay, so I hope that makes sense. You will also need times. So go on to indicators, type in kill zones, and just click on that first one right there. Okay, so click on that, open it up, pause the video right here, and copy the top 3. You only need the top 3, and then click on styles, copy mine if you want to copy mine, and then you'll be done. So then next, go on to indicators, type in market structure MK, click on that, open it up, copy the style that I have, go on to inputs, put 6 in both. I understand that I'm going fast, but you know, just pause the video if you need to. And then we also have a candle size indicator. So if you're not into the Discord group, come and join, because this is how you get it. I don't have it on TradingView unfortunately, but yeah, you can come into Discord, click on pinned messages, then jump to the code and just copy the code from there. So that's how you get all the indicators on your chart. It should look very, very similar to mine now. So the times that we trade, these are kind of the basic overviews of the strategy. So what I'm planning on doing is going over the basics first, going over what we've changed from the original strategy, and then also having some extras at the end that hopefully you guys like. So what are the times that we trade? We trade from 8 till 9 AM UK time, and then we also trade from 2 till 4 PM. Okay, these are the times that we now trade. Originally they were different. These are now the times that we trade. I'll get into the reasons why later, but these are the times that we trade. News events. Can you trade this with news events? I personally do not check the news when I'm trading this strategy. It's up to you whether you trade this around news or you don't. I personally do not check it. So it's up to you whether you trade or don't trade around news. Okay, that's completely up to you. But for me personally, I don't even check the news. The next one is the pattern that we look for. So let's say we're looking for a short. This is the 78 EMA. Okay. If we're above it, we're looking for longs. And if we're below it, we're looking for shorts. Okay. I don't care if you see a setup for a short when you're above the EMA. Don't take it. I don't care how good it looks, don't take it. Stick to this because it's going to keep you in that rigid kind of rule set. Okay. So let's say we're below, we're looking for shorts. This is what we want to see. We want to see a move down, we want to see a move up, move down, and then a move up. Okay, that's what we want to see. I'll go into a little bit more detail with this in a second. So when you see this, you will want to draw a line from this lower low body. Okay, the candle body that creates this lower low, draw the line out from that body. Then when we break this, you're looking for this move right here to come back up into that line. It needs to touch that line. You have to have a touch, okay? Once you get that touch, it can be a wick, it doesn't have to close, but once you get that, you are then looking for a move down. This candle move down is called our entry candle, okay? Once we get that move down, and that candle closes, we are then going to be looking for an entry. Well, we're going to be entering the market. This entry candle is going to be 4 pips minimum, okay? If you see a trade under 4 pips, or you see, okay, let me go back a little bit. This candle, okay, we are going to be using this candle, our entry candle, to basically see how big it is using the candle size, okay? Whatever that candle size is, double it. If that doubling number is smaller than 4 pips, you do not take the trade, okay? I hope that made sense. So this entry candle that gives us the entry to go needs to be bigger than 4 pips doubled, okay? So 2 pips pretty much. So once we enter, bang, we're in short. We need to double this. So let's say it is a 2 pip candle. You then double it, that is 4. Now, if you do have this candle size indicator, it's already doubled for you. You don't need to double it. You just hover over that entry candle and it will tell you what that figure is down here. So 4 pips. For our target, all we're doing is tripling the stop loss. So 4, 8, 12, 12 pip, take profit, bang, down there, okay? Pretty simple. So this is what we're looking for in general. Now let's go over to the chart and I can show you this. So it's currently the 28th. I'm just having a look at the 27th. This was all live on stream, you can go back and watch this. But basically, this was a trade that we took, okay? Now why did we take this? So we've got a few highs and lows in here. All we're going to be doing is drawing a line out from this higher low. So as you can see, the green one is the 78. We are below that. We then break this structure. Okay, we then come back up, and as in this candle comes back up into this area. We've touched it. We then have a down candle. Okay, this down candle is our entry. And if you have a look at the bottom left where that candle size indicator is, it says 10 pips. Excuse me. So then all you're doing is putting your stop loss at 10 pips from your entry. Okay, so you do that and then you just put 3 to 1, which is 30 pips. So as you can see, that's the trade. Now if we just zoom in here a little bit, there's some more details in here that I want to go over. So when we get this break, so this candle breaks it and we close below. This candle cannot touch this line. Okay, we need at least one candle to not touch this line and move away. Then the next candle can touch. Okay, so we need to have a little bit of space in between the break and the retest. It can be one candle, but you need to have a little bit of a gap in there, okay? So then once we get the retest and we get the down candle, we are entering that trade. Now, once you're in a position, here are some things that you guys are going to be able to decide for yourself on whether you want to do this or not, okay? But this is something that you could do. So once we get to 1-to-1, you move your stop loss to 0.75. Okay. Copy paste. Okay. So then once we reach this area, you move it to 0.5, 0.25, and then you move it to entry. Okay. So by this, I'm meaning 0.75, 0.5 is the 0.51, 0.25 is the 0.251, and entry is obviously your entry, okay? So this is trade management. You can decide to do this or not. The problem with this is if you're moving this on the 1 minute, it can sometimes wick you out on trades if you're moving it too fast. So I normally do this. So once we get down to 2, I will just move it to 0.75, and then 2.5 I'll go to 0.5. I'm not really that fussed about going to break even. I know that some of you are, but I'm not. So this is one of those kind of areas where you guys can choose to do this or not. It's up to you, okay? But this is the basic kind of strategy that we're looking for. As you can see, we did have another trade here where we have a higher low here. We extend that out, we retest. We didn't close below at any of these levels. We then close below, we enter. This is a 9 pip stop, 9 pip stop, bang, trade, okay? So that is pretty much the strategy. Now, this is something that is new, okay? I'm pretty sure this is new. I'm not sure whether I covered this. We trade from 2 till 4 p.m. in our New York session. When it gets to 4 p.m, close all of your trades, no matter where it is. Profit, loss, break even, I don't care. Close it, okay? That's what I'm doing. You can decide to not do that, but that's what I'm doing, okay? The reason I'm doing this is because the market tends to just go sideways. It doesn't really do much, and I'd rather just close the trade at 4 o'clock and be done, okay? You don't have to follow this. You can if you want to. It's your choice, okay? That's what I'm doing. So this is the general kind of gist of the strategy. Now, what have we changed in the strategy? We've changed the time that we trade. We used to trade 6 hours a day, okay, which is crazy. We now trade 3 hours, okay? We've added a little bit of a space in between the break and the retest. We calculate the stop loss a little bit differently. So before, we were doing, this is your entry candle. We would then measure that and put it on top. Now, we're just getting this and doubling it, and that is our stop loss, okay? It's a tiny little bit of a difference, but it does make a difference, okay? And that's why we've changed it. All of the changes that we've done have been for a reason. It's not just, you know, I fancy changing something, so I'm going to change it. All of the changes that we've done have been backed by data, okay? It's not opinion. So we've also done that. We have also added the 390 EMA, as I spoke about in the start of the video. And the reason why I've done that is just to give us some higher time frame bias, okay? Now, let's go on to some of the extras. So we had a trade today that some of you took, and I didn't. And in the stream, I explained why I didn't take it, but I'm just going to go over it again. So, if we just have a look at this, okay, we can see we do have a break, and we have the retest. But, all of these candles here, for me, are not good enough to enter, okay? Now, I know that the candle size is good enough, okay? You know, we've got 7 pips, 5 pips, 5 pips. But the candle bodies are not good enough. And I focus on candle bodies, not candle size, okay? The candle size is only for the stop loss. The candle body is for the entry. And this one is a good trade, but we didn't close below this green line, and if we don't close below that green line, I'm not looking to take a trade because we haven't actually broken that area yet. So we then break it here, but this body is not good enough for me. I want to see a good body, and it's just not good enough. It's just not good enough, so I'm not going to be taking that. We then come up and we don't retest. I'm just going to zoom in here so that you can see this. If I just move that up to the bodies, you can see that we don't retest this, okay? So I'm not going to be taking the trade. Even if we do get a nice candle like this, if this candle was here, I would have taken a trade. But it wasn't, so I didn't. Okay? So that is some of the extras. Also, I had a question in stream. Can we use pivots outside of the session times that we trade? Yes. So right here, this was a trade that someone took. They used a pivot outside of the time. That is perfectly fine. Okay? The reason why I'm not taking this trade as well, I discussed this in the stream, but I'll discuss it again. The reason why I'm not taking this is because of all the consolidation that happened before we entered London. When I want to see a good trade, I just want to see it touch and bang, we just go straight down. Okay? So yeah, that's the reason I wouldn't have entered this trade. So I think that is everything that I've got on this strategy side. I'm now going to be going over the difference between what we previously were trading and what we're now trading. Okay, so this is the data that we have for the first video. Okay, so the original 1 minute strategy video, this is the data. So 1% risk, 41% win rate, and a 10% drawdown with 99.5% gain over 3 months. Okay. Equity graph looks great, looks good. Monthly gain looks okay. But when we add the changes in, okay, when we add the changes in, this is what we get. We can risk 2% per trade, so we're doubling the risk. We have a 51% win rate and a 7.7% drawdown. Okay, so we're doubling the risk, but we still have 3% less drawdown than the first one that was on 1%. We also have over 200% gain. 200% gain over 3 months. Okay, equity curve looks amazing. Month by month is incredible as well. This is what I want to see. Okay, previously we had a 10% drawdown with risking 1%. This is now 7.7% with 2% risk. This is much better. So these are the results that I have. Now what I'm going to do also is get up some examples of the original strategy. Okay, most of these trades are still good, they're still valid. Okay, so let me show you these. So all I'm going to do is just skip through these. You guys can pause this whenever you want to, it's up to you. Some of these will be invalid now because this was taken in December when we were just creating the strategy, but most of these are good, and it's giving you a general idea of what the strategy is and also what we look for. Okay, so let's drag that over there. If you guys have any questions about this, drop them in the comments below. I'll be happy to answer them. I hope you have a good day. If you found value in this video, hit the like button, and yeah, have a good day, and I will see you in the next video.